In the rarefied air of the world's greatest speculators, there exists a track record so extraordinary, so consistent, that it stands in a category of its own. Imagine an operational career spanning 3 decades, navigating some of the most volatile and treacherous markets in modern history: the 1987 crash, the Japanese bubble, the dot-com mania, the 2008 financial crisis, and finishing every single one of those 30 years with a profit. Now, imagine that the average annual return across those 3 decades was a staggering 30%. This is not a theoretical exercise, it is the real-world track record of Stanley Druckenmiller. He is the ultimate operator's operator, a legend so revered that when other legends speak of the greatest of their generation, his is often the first name they mention. To understand this phenomenal success is to understand a mind that defies simple categorization. Druckenmiller is not a value investor, not a growth investor, not a pure chartist, and not just a macro thinker. He is all of them and none of them. He is a complete, intellectually flexible opportunist. His success is not the result of a single, rigid system, but of a dynamic and adaptable analytical framework that allows him to identify the dominant themes driving the market at any given time, and to bet on them with immense focused conviction. To deconstruct the Druckenmiller method, we must first build this framework from the ground up. We will explore the core philosophy of absolute intellectual flexibility that guides him. We will dissect his unique two-part analytical engine that synthesizes a top-down macro view with bottom-up security selection. And we will examine the home run mentality that sets the stage for his legendary big bets. To comprehend the operator, one must first understand his origins. Stanley Druckenmiller's path to the pinnacle of finance was meteoric. He graduated with a degree in English and economics and began a PhD program in economics at the University of Michigan. However, he quickly grew bored with the abstract theoretical nature of academia and dropped out to take a position as an oil analyst at a regional bank in 1977. His talent was immediately apparent. He possessed a rare combination of analytical rigor and an intuitive grasp of market dynamics. Within a year, at the age of 25, he was the head of the bank's research department. A few years later, he was managing its entire equity fund. By 1981, at the age of 28, he left to start his own firm, Duquesne Capital Management. His rise was a testament to a mind that was built for the specific intellectual and psychological demands of the market. His most famous career move came in 1988, when he was hired by George Soros to be the lead portfolio manager for the legendary Quantum Fund, a position he held for over a decade while simultaneously running his own fund. It was during this period that he and Soros would execute some of the most famous trades in history. The absolute foundation of the Druckenmiller framework is a principle of absolute intellectual flexibility. This is perhaps the most critical and most difficult trait to emulate. He operates with a complete and total lack of dogma. Unlike a value investor who is forever bound to a specific set of valuation metrics, or a growth investor who must always be invested in fast-growing companies, Druckenmiller has no permanent style or bias. His only loyalty is to making money. He understands that the market is not a static entity, but a dynamic, ever-changing environment. The strategies that work brilliantly in one market regime, for example, a period of low inflation and steady growth, can be disastrous in another, such as a period of stagflation. He believes that the great mistake many investors make is falling in love with a single model of the world. A deep value investor, for instance, might have a phenomenal track record over a 20-year period, but they may dramatically underperform for a decade if the market is dominated by a growth-led speculative mania. Their rigid adherence to their model becomes a liability. Druckenmiller's goal is to avoid this trap. His approach is to constantly ask, what is the dominant theme driving this market right now? He listens to the message of the market and is willing to change his mind in an instant if the evidence changes. His ego is not tied to being right about a particular forecast. It is tied to being profitable. This requires a profound level of intellectual honesty and the ability to discard a cherished thesis the moment the market begins to invalidate it. This flexibility is the bedrock of his consistency. It is what has allowed him to successfully navigate vastly different market environments, booms, busts, inflations, deflations, for 30 years without a single losing year. This raises a fundamental question about investment mastery. Is it better to be a dedicated specialist who masters one style, like deep value or systematic trend following, and sticks to it through all market cycles? Or is the ultimate edge found in the intellectual flexibility of a generalist like Stanley Druckenmiller, who adapts his entire approach to the market's changing seasons? Let us know your view in the comments. This philosophy of flexibility is powered by a unique, two-part analytical engine. Druckenmiller synthesizes a top-down macroeconomic view with a bottom-up fundamental approach to security selection. He is a master of both the telescope and the microscope. The process always begins with the top-down view. For Druckenmiller, the single most important factor that drives the price of all assets, stocks, bonds, currencies, and commodities, is the flow of liquidity, primarily directed by central bank policy. He famously learned from his mentor, George Soros, that earnings do not move the overall market. It is the Federal Reserve that moves the market. He is, therefore, an obsessive student of central banks. He analyzes their every statement, their interest rate decisions, and their balance sheet operations to gauge whether they are injecting liquidity into the financial system or withdrawing it. A period of easy money and low interest rates is a massive tailwind for financial assets. A period of tight money and rising interest rates is a massive headwind. This is his primary lens for viewing the world. Alongside liquidity, his macro framework is built on a deep analysis of the business cycle. He is constantly gathering data and speaking with contacts to determine where the economy is in its cycle. Is it in the early stages of a recovery, the mid-stage of a healthy expansion, the late stage of a boom, or the beginning of a recession? His goal is to identify the major inflection points, the moments when the economic tide is about to turn. This top-down analysis, which combines his view on liquidity and the economic cycle, gives him his primary directional bias. It answers the big questions. Is this an environment to be aggressive and risk-on, or defensive and risk-off? Which asset classes are most likely to benefit from the current macro environment? Is this a world that favors stocks, bonds, or hard assets? Once this macro thesis is established, Druckenmiller then deploys the second part of his analytical engine, a rigorous bottom-up search for the best instrument to express that view. This is what separates him from many other macro traders. He is not content to simply buy a market index. If his macro view is bullish on the economy and he believes that technology stocks are likely to lead the market, he does not just buy the NASDAQ 100 ETF. He then does the deep fundamental research to find the one or two specific companies within that sector that he believes have the best earnings growth, the strongest competitive position, and the most attractive valuation. He's famous for his best horse on the racetrack analogy. His job, as he sees it, is to first identify which racetrack macro environment is most favorable, and then to find the very best horse individual security running on that track. This makes him a phenomenal stock picker in his own right. He looks for companies with strong secular growth drivers, and he pays close attention to earnings and cash flow. But his flexibility in choosing an instrument is key. If his macro thesis is about a coming devaluation of a currency, he will express that view directly in the forex market. If his thesis is about rising inflation, he will express it by buying commodities or shorting bonds. The instrument is always secondary to the primary macro idea. This entire analytical process is geared towards one objective: identifying what he calls a home run opportunity. Druckenmiller's philosophy is not to try to grind out small, consistent profits every single day or month. He believes that is a difficult and often losing game. Instead, his entire process is designed to identify the rare once or twice a year opportunity where his analytical framework signals a massive, high-probability asymmetric bet. These are the fat pitches, the generational trades where he has immense conviction. He believes in preserving his capital and taking only small, exploratory risks during periods of low opportunity and high uncertainty. But when one of these rare home run setups appears, his philosophy is to swing for the fences. This patient yet aggressive mentality is the final component of his analytical framework, and it sets the stage for his legendary approach to position sizing and execution. This synthesis of broad macroeconomic vision and deep specific analysis is a habit of thought cultivated over decades. Developing such a rigorous intellectual framework is the ambition of every serious market participant. To continue this journey and reinforce these professional-grade analytical habits, subscribe to this channel and click the notification bell. Let this be the place you come to forge the intellectual architecture that will define your future. But having a brilliant analytical framework is only the first step. The true source of Stanley Druckenmiller's legendary returns is found in how he acts on that analysis. His philosophy of betting big, his ironclad discipline, and his ruthless approach to risk management. It is in the art of the big bet that the analyst becomes a legend. In the first part of our analysis, we established the powerful and unique analytical framework that guided the mind of Stanley Druckenmiller. We explored the core principle of absolute intellectual flexibility that allows him to adapt to any market environment, free from the dogmas of any single investment style. We deconstructed his hybrid analytical engine, a synthesis of a top-down macroeconomic view driven by liquidity, and a bottom-up search for the best individual securities to express that view. And we touched upon his home run mentality, a patient philosophy of preserving capital while waiting for the rare, high-conviction opportunity to present itself. But having a brilliant analytical framework is not enough. Many great analysts are poor investors because they lack the courage, the conviction, and the risk management framework to act decisively on their insights. This second part of our masterclass is dedicated to the operational genius of Stanley Druckenmiller. We move from the world of analysis to the world of action. This is the story of how he translates his intellectual framework into massive, portfolio-defining bets. We will dissect his famous and often misunderstood doctrine of concentrated position sizing, a philosophy of betting big when the odds are overwhelmingly favorable. We will then explore the crucial counterbalance to this aggression, his ruthless and unemotional system of risk management, the very mechanism that has allowed him to survive and thrive for over 3 decades without a single losing year. Finally, we will walk through 2 of his most legendary market campaigns, his role in the breaking of the Bank of England and his masterful navigation of both the rise and fall of the dot-com bubble, as the ultimate case studies in conviction and survival. It is in this art of the big bet that the analyst becomes a legend. The first and most defining feature of Druckenmiller's operational strategy is his philosophy of concentrated position sizing, an approach often summarized by his own advice. When you have a home run, bet the farm. This is a radical and direct challenge to one of the most sacred tenets of modern finance, diversification. For decades, investors have been taught that the prudent way to manage a portfolio is to spread capital across a wide array of different, uncorrelated assets. The goal of diversification is to smooth out returns and reduce volatility. Druckenmiller believes that for a truly skilled and knowledgeable operator, this approach is a profound mistake. He has called broad diversification a protection against ignorance, and has argued that it often leads to mediocre results, a concept he calls diversification. His logic is a powerful argument for the power of conviction. He believes that truly great generational investment opportunities are exceptionally rare. An investor may only identify 1 or 2 such opportunities in a given year, or perhaps only a handful in an entire decade. When one of these rare fat pitches arrives, and all the elements of his analytical framework are in perfect alignment, he believes the single greatest strategic error an investor can make is to be timid, to allocate only a small, diversified portion of one's capital to their single best, highest conviction idea is, in his view, an act of profound irrationality. Why would you allocate the same amount of capital to your 10th best idea as you do to your absolute best idea? His philosophy is to wait with the patience of a predator for the perfect setup. During these waiting periods, he preserves his capital, takes only small exploratory risks, and conducts his research. But when the opportunity finally arrives, he acts with overwhelming and decisive force. This is the bet the farm or go for the jugular mentality that he shared with his mentor, George Soros. It is a strategy of making very large, highly concentrated bets, often using leverage to maximize the potential return. This approach requires an immense level of psychological courage. It means being willing to have a significant portion of your portfolio's performance, and indeed your entire year's performance, ride on the outcome of a single powerful thesis. It is a high-stakes approach, but for Druckenmiller, it is the only logical way to operate. His goal is not to grind out a small, consistent profit every single month. His goal is to generate spectacular, absolute returns over the long run, and he understands that such returns are not born from timid diversification, but from the courageous and aggressive exploitation of rare and extraordinary opportunities. However, this philosophy of aggressive, concentrated betting would be a recipe for catastrophic ruin if it were not paired with its essential counterbalance, an equally aggressive and ruthless system of risk management. This is the secret to his 30-year winning streak. He is able to bet big precisely because he is a master of getting small the instant the market tells him he is wrong. His entire defensive doctrine can be summed up in another of his famous maxims. The first loss is the best loss. This principle is the practical application of his intellectual flexibility. It is about the complete and total subordination of one's ego to the objective verdict of the market. For Druckenmiller, a trade is not a personal statement. It is a hypothesis. The moment he enters a position, he is constantly testing that hypothesis against the market's price action. The moment the price starts to move against him in a significant way, invalidating his thesis, he does not wait. He does not hope. And he certainly does not average down. He exits the position immediately and decisively. The small loss he takes is not a failure, it is simply the price he paid for a piece of information from the market. The information is, his hypothesis was wrong. By taking that first loss quickly, he preserves the two things an operator needs to survive: his financial capital and his emotional capital. A small loss is easy to recover from, both financially and mentally. A large loss, nursed in the hope of a turnaround, is what destroys accounts and clouds judgment for months to come. This ability to admit a mistake instantly is what allows him to be so flexible. There are legendary stories of him putting on a massive long position in the morning, only to have the market move against him. Recognizing that his timing or his thesis was flawed, he would not only exit the entire long position for a loss, but would completely reverse and establish a massive short position in the very same afternoon if the price action warranted it. This requires a level of intellectual honesty and a lack of ego that few individuals possess. While his position sizing is a function of his conviction when he believes he is right, his risk management is a function of his humility, his deep understanding that he could always be wrong. This powerful, paradoxical combination of extreme aggression when he is right and extreme defensiveness when he is wrong is the very engine of his long-term success. It is what allowed him to make his big bets without ever suffering a losing year. The practical application of this entire doctrine is best seen through his most legendary market campaigns. The first is the one that made him a global icon: his role as the lead manager of the Quantum Fund during the 1992 bet against the British pound. As we have explored, the Quantum Fund had identified the flawed premise of the European exchange rate mechanism. It was Druckenmiller who, as the chief operator, conducted the deep research and initially formulated the thesis that the British pound was fundamentally overvalued and that the peg was unsustainable. He began to build a significant short position throughout the summer of 1992. The pivotal moment came in a famous meeting with George Soros. Druckenmiller presented his high-conviction thesis, outlining his plan to significantly increase the size of their bet. Soros, in his role as the master philosopher and psychologist, pushed him even further, encouraging him to bet the entire fund and more. This was the fusion of two great minds. Druckenmiller's rigorous bottom-up and top-down analysis had identified the what, and Soros's philosophical understanding of reflexivity and market breakpoints provided the courage to scale the how. Druckenmiller then executed the trade with flawless precision, building a short position in excess of $10 billion. The result was a profit of over $1 billion and the ultimate validation of their shared philosophy. When you have identified a true asymmetric fat pitch opportunity, you must act with overwhelming force. However, an even greater testament to his flexibility and risk management was his masterful navigation of the dot-com bubble from 1999 to 2000. This 2-year period is perhaps the single greatest example of his ability to adapt his thesis and completely reverse his positioning, allowing him to profit massively from both the end of the boom and the entirety of the bust. In late 1999, Druckenmiller was, by his own admission, a technology bull. While he was intellectually aware that the valuations of internet stocks were reaching absurd levels, his primary analytical driver, liquidity, was still screamingly bullish. The Federal Reserve was still accommodative, and a tsunami of public and institutional capital was flooding into the Nasdaq. He knew that fighting this powerful, liquidity-driven trend was a losing game. Applying his best horse on the racetrack principle, he was heavily invested in the leading technology and telecommunication companies, riding the final parabolic phase of the bull market. He made a fortune for the quantum fund in the final months of 1999. The pivot came in early 2000. His analytical framework began to flash red alerts. The Federal Reserve, now deeply concerned about the speculative mania, had begun to aggressively tighten interest rates, withdrawing liquidity from the system. For Druckenmiller, this was the single most important signal. The fuel for the fire was being removed. Simultaneously, his technical and sentiment indicators were showing signs of extreme exhaustion. He recognized that the inflection point was at hand. In a move of breathtaking speed and conviction, over a period of just a few weeks in early 2000, he did something that almost no other manager could do. He sold their entire multi-billion-dollar portfolio of long positions in technology stocks. He then completely reversed his stance and, using the capital he had just freed up, established a massive short position, betting on the collapse of the very same stocks he had been championing just weeks earlier. He was one of the first major players to definitively call the top. When the Nasdaq peaked in March 2000 and began its catastrophic 80% decline, Druckenmiller was positioned to profit from the entire move down. This single campaign, aggressively long at the peak of the mania, and then aggressively short just as it broke, is the ultimate proof of his philosophy in action. It demonstrates his intellectual flexibility, his discipline to act on a changing thesis, and the ruthless risk management that is the true source of his legendary 30-year winning streak. Building a successful system is about building the right habits. The philosophy of Stanley Druckenmiller is not an abstract theory. It is a set of principles that requires the cultivation of disciplined habits of analysis, courageous execution, and ruthless risk management. If you are serious about developing these professional-grade habits, subscribe to this channel and click the notification bell. Let this be the place you come to forge the intellectual framework that will define your future in the markets. In conclusion, the legacy of Stanley Druckenmiller is that of the ultimate operator. He represents perhaps the greatest synthesis of a top-down, intellectually driven macro thinker and an aggressive, conviction-based tactical trader in modern history. His phenomenal track record is a testament to the power of a truly flexible and open mind, one that is not wedded to any single dogma, but is instead relentlessly focused on identifying the dominant theme of the market at any given moment. His career proves that it is possible to combine the courage to make massive, concentrated bets with the humility to admit a mistake in an instant. It is this paradoxical combination of extreme aggression and extreme defensiveness that defines his genius and provides a powerful, if challenging, blueprint for any serious student of the markets. His entire doctrine is a masterclass in how to pursue spectacular returns while being, first and foremost, a master of survival. As a final recommendation for any serious market student, it is valuable to study the raw psychology of speculation, as it is the foundation upon which all market movements are built. The foundational text in this area remains Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. The main character, Larry Livingston, is the prototype of Jesse Livermore. It is a book that transcends time, offering profound insights into the unchanging nature of markets and men. We highly recommend the edition that features a unique, detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old wisdom for the modern reader, making its lessons more powerful and accessible than ever before. A link to this essential edition has been provided for you in the description below.